Welcome to Bullish and Beyond. It's Beery the Bull. I'm your AI co-host. Join myself, Brian the MacMan, and JT Knows Things while we dive deep into the world of stocks, crypto, and how to live a bullish life. It's time to get bullish, and there's no better place to start than right here. Let's dive in.
What's going on, everybody? It's your boy JT, and we are back to Bullish and Beyond. Today, we are going to be talking about something that's trending all over Twitter, something I cover on my channel all the time, M2 liquidity's correlation to Bitcoin. Okay, so that could be a complex topic, so I'm going to break it down simply in this episode and just help you guys understand what actually is the impact of M2 to Bitcoin's price and why is it so correlated. Now, Brian is off doing amazing things, so it's going to be a solo episode. And I wanted to talk about this topic because macro looks generally bleak. I cover that a lot on this channel, but also back at JT Knows Things. And Bitcoin's still going upward, and it's causing a lot of questions, right? Because Bitcoin is supposed to be a risk on asset. But with more money printing, people are pouring into Bitcoin, regardless of the situation in an economic format. Now, what do I mean by all of that? Well, first, let's go look at the world and analyze all of the geopolitical conflicts that are going on, right? Zelensky tried to kill Putin. Crazy. Um, Trump walked away from Israel. Even crazier. You have China and Taiwan. And then you have strife between America and NATO. Crazy. This is the most likely World War III. Like, this is the closest World War III we've ever been, right? So, from a geopolitics side, bearish, right? When we look at America, okay, we have serious issues in our banking system. They're over 400 billion as of last month in the water or under their NAV on their balance sheet, which means they're insolvent. If you guys didn't know this, go to the FDIC website and take a look. So our banking system is parked in these long-term T-bills and commercial real estate, and commercial real estate backed mortgage securities is at the highest delinquency rate we've seen since '08. That means their securities are under. 1 out of 10 commercial buildings are delinquent on their mortgage right now. And they are parked in these 30-year treasury bills because we had 0% interest, right? And what they decided to do with that 0% interest for a very long time is just buy 30-year bills because they give more yield because they're greedy. Well, what happened? We raised rates at a clip faster than we've seen in 50 years since Volcker, really. And that flipped the bonds, making them, yield negative, which means that, these banks are sitting on hundreds of billions of losses. So we have an unstable geopolitical environment. We have an unstable banking system, which is basically how M2 works. For you guys that may not know, there's different, it's all money, but there's different schedules of money, if you will. M1 money is money hot off the press. M2 money is money that I like to say is washed by banks, meaning they take the money and then they loan it out and spur the economy. So you have the backbone of our monetary system struggling. We have over $6 trillion. Now we're going to fiscal policy. We're going to our government. We have 23% higher debt to income ratio. We're 123%. That means If you're a household, you make 100,000, you're spending 123,000 every year. But the government has trillions, so it's more like around 7 trillion of deficit in increase in the past 5 years, which is causing us to have to print more money to even pay off the interest of the loans, right? Our interest payments to central banks have surpassed our defense budget, which is why Trump built Doge and they're doing all of this stuff, right? And that kind of behavior is bearish. Everything I've talked about so far is bearish. Yet, Bitcoin has more than doubled in the past 12 months. And we have S&P 500 1% off its all-time high. So if we just look at how the market's behaving, Brian and I talk about this a lot on the podcast. News articles, headlines are changing the prices in the stock markets, not 1, 2, 5%, but 10, 20, 30%. Okay. What that means is the entire market is skittish or uncertain. They're making emotional decisions quickly. And that typically means we are near a peak of some kind of bull run. When the money starts getting really fast, really loose, sloshing around left and right, we lose $1 trillion, we're up $2 trillion. It's crazy. Crypto's always been like that because it's a small asset class. I mean, the entire market cap is 3.5 trillion, right? That's 1.5 companies in the S&P 500. Okay, so we're very early and we're very small. So it doesn't take a lot of money to move it one way or the other. The fact that the stock market's moving like crypto and it's 1,000 times larger, I don't even know, with the derivatives, certainly. Um, all of this suggests that we are in a very shaky situation. Now, here's the important part. And this is really why it's all over Twitter, in my opinion. Maybe people aren't there yet, but everything, everything seems correlated to M2. It's just a matter of degree of how correlated. Now, when I say global M2, what I'm talking about is all of the money in circulation in the world from every central bank in the world, right? So America's M2, I think, is around 19 trillion. There's 104 trillion M2 in the world. So we're roughly 20%, which is why, out of 200 countries, which is why American monetary policy means the most. So what our central bank is doing affects like the whole world because we're 20% of the M2. We're plus 60% of the global trade, even though it has been trending down. So everyone is using the dollar. Our entire country is about exporting the dollar and importing goods because we can make infinite amounts of dollars. And then when people make a profit off our consumerism, they invest back in America because our stocks outperform anyone else. Our T-bills typically, generally speaking, have been solid, even though there's less demand. So we talk about America a lot because it does affect the world, but in general, the rest of the world does actually matter. It's 80% of the M2. And I see people on Twitter talking about how the NASDAQ is correlated to Bitcoin, gold, and global M2. But the most correlation, around 95.6%, is M2. NASDAQ's 92, gold's 89. So it behaves depending on the day like a high growth tech stock or like a store value asset or an inflationary hedge. And honestly, if you understand economics enough, I would argue that all of those things hedge inflation. So really we're talking about a paradigm shift of risk on to risk off with Bitcoin. The markets are playing with that concept. Bitcoin was built for risk off sentiment, but since it's still so young and early in its existence, It has a long way to go, in my opinion, for that paradigm shift. Now, back to M2, okay? Regardless if it's risk on, risk off, all of these bearish consequences that could occur, as an example, these geopolitical conflicts lead to a scare, panic in the market. People want to rip their deposits out of their bank. Well, guess what? Banks are insolvent. So any kind of bank run could cause a collapse of the banking system or a black swan event of any kind, really, and people get really scared. Basically, hysteria could cause the banking system to collapse briefly. Then what's the government going to do? Bail them out? They have every time before. So how do they bail them out? They print more money. Do wars cost money? Mm-hmm. So if World War III starts, what do they have to do? Print more money. Um, let's say the bonds and the T-bills, they lose so much demand that it's in free fall, okay, due to the dollar weakening and all these other things. They print more money and then they buy the T-bills. The Fed would. So ultimately, even if we're in this shaky situation and money is scared and banks are collapsing, whatever bad thing could happen, it very well could be the best buying opportunity of our lives because shortly thereafter, people are going to print money. And since Bitcoin is a global asset, meaning anyone in the world can buy it and they don't need, the government to do it. If money's looser anywhere in the world, people are choosing Bitcoin. So if, you know, 40 separate countries like NATO get wrapped up into World War III and they got to print, that could be 10, 20, 30 trillion dollars added to global M2. And with a 95% correlation, that could send Bitcoin roaring. We went from 75 to 105 after around 10 countries in the southern parts of Asia decided to do some quantitative easing. And it wasn't even a lot, meaning they cut rates, meaning their money was looser. Now, if America prints money and cuts rates, we can get it at better terms, keep our interest payments lower, refinance our current debt at a lower rate, which is why Trump is hammering it. And then money is loose again. We're off to the races. I I'm not a perma bull, but if you analyze the economy and you analyze the world monetary system, it feels like every single country is addicted to printing money. Some countries are further down the path than others. If you go to Latin America and Africa, you see what hyperinflation can look like and what, you know, a currency being so saturated in volume that, you need a million of something to buy one, apple. And I'm not saying America's on its way there, but if we continue to print money globally, it just means that you're going to need more dollars or more of that currency to buy the same unit of things. It's not that an example to explain that. In the 70s, a 1,200 square foot home might have only cost 20 grand, 30 grand, 50 grand, right? Now it's like 419,000. Okay, so in 50 years, it's not like homes got that much more valuable. It's the same shelter, right? But the reality is that in that period of time, they've just printed so much money that you now need that many more dollars to purchase the same unit of shelter. And that applies to literally everything, which is why I say everything it's called the Everything Code by Raoul Paul. Highly recommend you listen to him. but everything really is correlated to the supply of money. And then you have to ask yourself, where do you have the most upside? If they print 5, 10 trillion in quantitative easing comes, tech stocks might rip 50%, but Bitcoin could rip 200%, which is why I'm all in on crypto and why I talk about it so much. But I came here today to shed light on all these things and hopefully bring you clarity about what's going on in Twitter right now and the world, really. Everyone's freaking out about all of these things because it is that sensitive. But through the storm, on the other side of the hurricane, right, just means more money printing, which means higher prices for everybody. And that's why we stay bullish here at Bullish and Beyond. We're always looking long term. Stick to your guns, do your research, everything will be fine. And when the market gives you that gift of volatility, baby, don't be afraid. Do not be afraid. That is where you can make life-changing money. When you are greedy, when others are fearful. And we'll be here every week talking about those concepts and letting you know when the right time is, at least in our opinion. Never financial advice, but I manage a hedge fund. Brian is a successful financier with his own personal finances, considering launching a fund as well. And we just find it pertinent to bring these topics to you all so you can make better, educated decisions for you and your family in your future. Thank you so much for tuning in. This was a bullish moment by your boy, JT Knows Things. Until next time, peace and love, guys. I'll see you.
Bulls. That's a wrap on today's episode of Bullish and Beyond. Remember, the market never sleeps and neither should your ambitions. Whether it's stocks, crypto, or just leveling up in life, stay focused, stay bullish, and keep charging forward. Keep your energy high and your mindset bullish. This is Beery the Bull, your AI co-host, Brian the Mac Man, and JT Knows Things signing off. All content published by Bullish and Beyond, LLC reflects personal opinions only and is provided for informational purposes. Please conduct your own research and discuss with your accountant and/or financial advisor before making any financial decisions. The information presented should not be taken as financial advice. We are not financial advisors. Nothing you hear, see, or read in our content should be considered as any form of financial, investment, or legal advice, or a solicitation to buy or sell any assets, or to make any financial decisions.